Let's get into our weekly wrap session, our wrap of the week. And I wanted to start with a poll I asked you recently. Will the next 10% move in the S&P 500 be higher or lower? This is a common question we would ask on the institutional side. We loved, talking with people and trying to get a sense of where they were at in terms of next steps. I just want to highlight, this is using our ACP functionality. Here's the S&P, closed right around 3,700 today, which is poetic. 10% higher would put us around 4070, right? 4,070. 10% lower would put us around 3,330. So 10% higher, obviously, we're pushing well above previous highs. We'd be above 4,000 for the first time, which would be a pretty significant move higher. 66% of you, 2 out of 3, said that was what was next. A third of you said the next 10% move would be lower, which puts us in the 3330 range. What's fascinating is that doesn't even put us below the low from October. 10% down feels like a long way down. Don't get me wrong, it's 10%. That's a number, but it's not even below the low from early November, from late October, right? Or the low from September. So that's putting us still within that wiggle room of the pullback from the earlier in this fall period. So 2 out of 3 of you saying higher. I didn't respond to this one. If I had to respond, I would probably say lower, only because I think we'll continue to move higher. But I'm seeing January, February feels like a pretty decent pullback opportunity. I wouldn't be surprised if we sort of retest some of that area. And I say that just based on extreme breadth, extreme sentiment that seems very similar to me before we get a pullback of meaning. But again, price is king. As long as the price remains in an uptrend, higher highs or higher lows, the path of least resistance certainly remains positive. So certainly keep that in mind. Let's continue to wrap the week. Again, overall, you can see on the small preview chart, the S&P really jumped to close just above 3,700 there, but we'll have to see as we digest all the closing prices where things played out. The NASDAQ finished about 0.1% lower, mid caps and small caps even more. And the small cap index really was the worst of the bunch here. The VIX just below 22. On the bond side, we had bonds in form of the TLT down about 1/3%, with 10-year yields back around 95 basis points, testing that key 1% level. I think so many do not imagine that the market that rates will be able to go higher than that, which is probably one of the contrarian reasons why I think it absolutely will in the new year. But we'll see. Gold a little bit weaker, just flat to down. Silver down about 0.8%, but the rest of the commodity space higher, with oil prices moving higher as well. Bitcoin continuing to impress, sort of chopping around a bit, just below 23,000. This is after breaking above 20,000 and staying there for the first time. So certainly has been a euphoric rise this week. We'll see here as we go to our weekly relative movement charts how much that has happened. In terms of sectors, I just want to point out energy, in terms of key themes, energy rotating lower again today. And we talked about the bearish divergence that we saw in things like the OIH and other, oil services, the OSX and other energy benchmarks. So certainly following through on that, I think that that certainly indicated an exhaustion to the upside and certainly seeming to play out so far. On the positive side today, you have materials, which has not really been on the top very often. So that's interesting to look at. You may want to focus on some of those names if you've not seen them and see what is working, what's breaking out there. Let's go to our weekly wrap. I like to start with this chart, which is the last 5 days on these major asset classes. My labels might have bounced around a bit because things were fluctuating quite a bit going into the close, but I'm sure you can see with the color coding where everything is at. The S&P 500 finished up about 1.2% for the week. This is from last Friday's close. What outperformed the S&P this week? Emerging markets up about 1.5%. Gold about 2.3%. The NASDAQ 100 up 2.7%. Small caps up just under 3%. Crude oil, the big winner out of this basket, up 4.8%. What underperformed stocks this week? The U.S. dollar was down another 1.1%. Again, if you're looking for an example of a stock breaking to new lows consistently, the U.S. dollar, hard to find a better example than that right about now. USD, $USD, certainly showing weakness. And if you flip that over, things like the euro, the Canadian dollar, you can see making new highs, and that's sort of the inverse of the U.S. dollar chart. Bonds, the worst out of the bucket, down 1.4%. Now, what am I missing here? Any major thing we've talked about that's not on here? Correct guess if you said Bitcoin. I actually took it off because it was skewing the rest of them so much. So everything we just looked at is down here at the bottom. Here's Bitcoin up 27% for the week. So I know a lot of investors have avoided cryptocurrencies, and I don't blame you. And there have been times when I've not referred to it often on the show, because I think for most people, focusing on other asset classes sort of makes sense. But the movement that you've seen, and it's not just this week, which has obviously been pretty extreme to the upside. This has been momentum that's been building for a while, and you've seen this theme come up as Bitcoin has broken 10,000, then 12,000, then 14, then 16, 18, and now up to 20 and beyond. So if you've not paid attention to it, thought about how they fit into an asset allocation decision, I'd encourage you to start incorporating it. $ BTC USD is the way to look at actual Bitcoin prices. In terms of tradable securities, other than that, GBTC tends to be the one we find most commonly accessed on our platform, which is an investment trust, which is basically related to the price of Bitcoin for sure. So check those out if you haven't. But certainly that's been the if you group everything together, throw it in a pile, that's certainly been the biggest gainer out of the basket. In terms of other quick themes to hit on going into the close, I don't think much more. I'd like to get into the Mindful Investor Live chart list if we can, and kind of dig into there. Maybe tobacco stocks are an interesting one. We haven't talked about these in a while, but if you look at the tobacco index, I'd be focusing on themes like this as we go into year end. What's really starting to break out? What's starting to show some increasing momentum? And we've talked about Philip Morris, Altria, and some of these stocks that have done well. It's interesting to see the tobacco group has actually broken above its September high now, and now that becomes support, which it was tested this week, and now closing on a high for a week, a new 10-month high for the group, and the relative strength starting to improve. If I was looking for ideas right now, I would be looking for groups that are able to break out, groups where the relative strength is improving, things that are able to prove that they have some upside potential relative to others. Auto's the number one group, and obviously Tesla's a big driver in that. Tesla joining the S&P 500 today, if you missed it, and that's sort of off schedule. It's sort of a one-off addition to the S&P, which is a little unusual. And it felt like Tesla was not going to make it in the S&P, and now all of a sudden it is. Overall, that tends to be a good thing for a stock, but also is going to inject some volatility as institutions and others have to sort of think about their allocation to Tesla. So certainly be watching that chart if you haven't yet, to see how it digests this news into the next week and into the new year as well. Let's continue on to the Mindful Investor Live chart list. We'll spend the rest of the time here. And if you've not seen this before, the way you access this is go to the articles page, go up here where it says all StockCharts blogs, go to mine, which is called the Mindful Investor. You'll see some fantastic articles, but at the top, you'll see live chart lists. That'll get us right to the point we're going to start here. You're welcome to take these and use them in your own work. Starting with the market trend model, this is a weekly model using exponential moving averages to quickly summarize, and it's a broken record of sorts. All three timeframes, short-term, medium-term, long-term, have remained bullish really since early November. The medium-term model sort of did a head fake, turned negative a little bit in mid-October, turned back positive the first week in November, has remained positive as the S&P's continued on to new highs. So again, just successive new highs every week is going to push these trend following devices higher for good reason. So all across the board, it's telling you that the trend has been positive. And again, that's not a judgment call. It's not opinion. That's just a fact based on the trends. Higher highs, higher lows. Until that's different, the trend is positive for stocks. The daily S&P chart, you're showing a bit of distribution. It looked a lot worse earlier in the day as we were trading near the lows. We sort of recovered and finished just above halfway of the day's range. But overall, if you think of the bigger picture, we broke out of this consolidation range from September and October, really sat around that 3,550 to 3,600 level, and that resolved to the upside. Now, in the short term, this 3,700 range has sort of served as resistance. And I think going into next week, the question will be, do we follow through on a fairly positive week this week and continue that on into next week, push above 3,700, at which point, I mean, just the sky's the limit as you continue to see higher highs. In a pullback, 3,550 to 3,600 is the 50-day moving average. It's the congestion range from back here in November where we sat after we broke out above the previous highs, and it's also the high from last year back here in September. So that's a pretty logical pullback point. I think that would be the first point to consider. If that holds, then the trend remains positive. If not, then you have to start looking at some of these other areas and where a deeper correction would be. And as a reminder, when we talk about 10% up or down, 10% up is up here into 4,200, 4,300. 10% down would be down here around 3,300, which would put us, again, just above these previous swing lows. In terms of breadth, the way I would summarize the breadth characteristics of the market are positive and by any measure. And we have a lot of different ways of measuring breadth, or another way to say that is participation. How are individual stocks, what are they doing relative to the overall market? The cumulative advanced decline lines, which we're seeing here for 4 different buckets of stocks, the S&P, so large cap, mid cap, small cap at the top, is the New York Stock Exchange. All 4 of those making new highs again this week, all continuing to push higher, suggesting that again the trend is positive, and that's supported by pretty healthy breadth conditions. So until those lines start to turn down, even if the S&P sort of falters, it tells you that there are plenty of stocks that continue to push higher, and that's what I would focus on. In terms of new highs, one of the things that would make me be skeptical is if there's not enough new highs, or not enough stocks able to push to new highs as the S&P is trying to do so. In the last couple of days, you had about 6, 7, 8% of the S&P making new 52-week highs. That's not bad. That's not extreme. At later stages of some bull markets, you've had well above that. You've had 3 to 4 times that. Here it's about 6 to 8%, which is not bad. That's sort of consistent for what we've seen for much of 2020. So no real cause for concern there. One interesting data point, if you caught my conversation with Tony Dwyer on Wednesday, which if you missed that one, we had a lot of fun talking about the markets. He had some really good thoughts about the macro conditions. And one of the things he and I talked about off camera was the breadth conditions now versus 2009. And if you look at a bombed out market with almost 0% of the S&P above their 200-day to an extreme upside move, a euphoric move of over 90% of the S&P in a positive. The only time that's happened in recent history is in 2009, coming out of the 2009 low. A lot of differences between now and then, obviously, but the breadth conditions are actually pretty similar. Another interesting chart is with sentiment. If you look at the AAII survey, you had a big spike in sentiment in early November, and then a steady decrease in bullish readings, even though it's still above 40%. The time that actually looks really similar to is 2018, the beginning there. If you look in January, we made a new high, extreme bullish sentiment. It's kind of what we saw here. And then the next month was sort of weaker sentiment as we made new highs. It's kind of what we're seeing here. So I'm curious if we're setting ourselves up for a bit of a 2018 January pullback like we saw there. And again, overall, the trend, continued higher after some choppiness, after some digestion. And maybe that's what we have in store for us in the first quarter. I'm not sure. Only other thing we have time for, I just want to point, small caps continue to dominate. That is driven by a lot of things, but a weaker dollar is certainly part of that. And if you look at U.S. versus the world, continues to slope downward. So if you've ignored non-U.S. stocks, I would strongly encourage you to think about non-U.S. exposure and where you might see some technically oriented opportunities, trends, and breakouts that are starting to work.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.